Each year, Davos serves as a serene setting to explore the world's most urgent issues. And in 2026, flashpoints were everywhere.
The world must not return to the law of the jungle, where the strong bully the weak.
Without collective governance, cooperation gives way to relentless competition.
The architecture, the very architecture of collective problem solving are under threat. A world of fortresses will be poorer, more fragile, and less sustainable.
Of course, nostalgia is part of our human story, but nostalgia will not bring back the old order.
Leaders in business, finance, and politics met to share insights and set agendas at a critical moment for the future of global cooperation.
The question is, what new equilibrium will we move towards?
Diversifying away from America is impossible.
We are not yet worried about frothin that may be like dot-com bubble.
It makes no sense to use trade tariffs to achieve security goals, and we have to push back.
Join us for a look back at a momentous week. Bloomberg's recap of Davos 2026 starts now. Hello, I'm Francine Lacqua. Welcome to Davos, where world leaders once again gathered for the annual event hosted by the World Economic Forum. This year's meetings took place against a backdrop of economic and geopolitical turbulence, with global alliances under stress and institutions scrambling to respond. The conversations were as lively as ever, and the stakes were even higher than usual.
Good morning, good morning. The World Economic Forum taking on a new dimension. Davos interrupted Wednesday morning here in Davos, Switzerland, the President of the United States addressing this forum.
This really has been dominating the entire conversation, a question around the NATO alliance, a question around exactly what the U.S.'s role will be, and a question around how much the geopolitical fault lines are changing at the same time that business is booming.
We had a level of anxiousness in Davos right now. It'd be like through the roof. And there's a lot of opinion saying, look, are the UK and EU sleepwalking into disaster right now?
No one is naive around the threats in the Arctic and the High North. The question is how to face into those challenges. And we firmly believe in the UK and across Europe that we do that by NATO allies, by friends working together to secure the best outcomes, not unilaterally making decisions about another country.
So we want a piece of ice for world protection, and they won't give it. We've never asked for anything else. We probably won't get anything unless I decide to use excessive strength and force, where we would be, frankly, unstoppable. But I won't do that.
There is a sense here following this address from the President that we have removed the extreme tail risk with regards to Greenland. There is I think, a conclusion on behalf of financial market participants right now, Anne-Marie, that the President's come into this and de-escalated things just on the margin.
Absolutely. He even used the word he wants a negotiation to get Greenland back into the hands of the United States. And then he said he will not use force. He doesn't want to use force. He won't use force.
Do you think this means the trade threat is over, the higher tariff levels?
Well, not yet. And I think we have a European Council tomorrow evening. And I think we should step up and make very clear that this is it's unjustified. It makes no sense to use trade tariffs to achieve security goals, and we have to push back. But in the meantime, and are ready to act on it as a European Union. But at the same time, use the time in between for diplomatic efforts, because I think we should solve this diplomatically.
It looks like we have the concept of it. Real national security. It's right now a little bit in progress, but pretty far along.
This week's been quite a week. Emmanuel Macron, the French President, has said, basically accusing the US of trying to subordinate the Europeans. The Prime Minister of Canada, I'm sure you heard his speech, Mark Carney, the other day, said this is not a transition, it's a rupture. How would you describe relations with those countries at the moment?
I think our relations are perfectly fine, right? I described the relationship with respect to the whole, when Greenland was going back and forth before we sort of settled it with a framework agreement, right? I called it a kerfluffle, right? It's basically like if you have an argument with your spouse, that's not real. You know, it's not a real one. It's like a small thing.
My spouse doesn't go out there and deliver a speech after that argument and say it's the end of the relationship.
Fair enough. But you're right. And I think they overreacted. And it's proof that they overreacted because a day or two later, there's a framework that makes sense.
I've heard more fury from European leaders this week than I think I have ever before in terms of America.
I would say to
Do
my
you
European
worry about
colleagues,
the long-term consequences of that?
And I would say to my European colleagues, focus on implementing the agreements in The Hague. Build your defense industries, get the spending done, get your men and women in uniform. The numbers of those men and women in uniform, getting them ramped up is crucial. I mean, Germany is leading the way here, spending 90 billion more in 2029 than they did in 2021. So that's fantastic. Opening factories all over the place, but still overall as NATO, including the US, our defense industrial base is still too small and we need to ramp that up. So I think to my European colleagues, focus on really on the ball. And the ball is Ukraine. The ball is the implementation of the The Hague Summit conclusions. And then when you have time after dinner, we can still gossip and talk, but it is about implementing the real decisions.
It was welcome that we seem to have reached an agreement, or that we appear to have reached an agreement on Greenland yesterday, and Mark is to be commended for some skillful diplomacy. But obviously the process of getting to that agreement has clearly damaged trust amongst allies, long-standing allies with deep friendship and partnership. That's been the very unsettling thing about the last few days.
What's going on is really a change of the world order. I think Mark Carney was very right on spot when he described what we're living. And that makes events like Davos more important than ever, because we need to have fora to debate, to talk to each other, to try to find compromises. Because at the end of the day, the approach of the European Union must be pragmatic when we can, but firm when we must. And I think that we are at one of those turning points in the current week.
Coming up, more highlights from Davos 2026, thoughts on the year ahead in finance and technology.
I sincerely believe there is no bubble in the AI space.
This is Bloomberg. Welcome back to Davos. I'm Francine Lacqua. 2026 promises to be another volatile year for the global economy, and optimism over AI innovation tempered by anxiety over tariffs and trade tensions. Well, Bloomberg guests had plenty to say about the economic opportunities and the challenges ahead.
There's no question that the world has changed. This is probably, I was thinking about this morning, probably the most challenging moment in U.S.-European relations since World War II, or certainly one of the most challenging moments. And markets will see what the new equilibrium is. I think it's pretty clear, again, when you speak to our clients and leaders, that there's a general consensus that the old order that has shaped the world for the last 60 years is no more. And so the question is, what new equilibrium will we move towards? And there are many different outcomes that one can imagine, and depending on where we end up ultimately, we could have very different outcomes in the economy and in markets.
It's clear this year, at least my sense and some of the people I talk to, is that there is a little more heightened than usual sense of concern, uncertainty. And the best way to deal with this is to continue to engage. Dialogue is important. The Saudi delegation is here to make that dialogue count. We want to make sure that these discussions with discipline, with openness, being genuine, will lead to outcomes that we all desire.
Uncertainty is global uncertainty is a given, whether it's in terms of the geopolitics, whether it's in terms of trade, and whether it's in terms of the economic posture that is taken. From a central banker's perspective, one finds it difficult to say where the geopolitics would go, where the trade tensions would go, and we end up with a scenario where an event where we have got to work with scenarios because we can't quite tell. It's really a difficult time to forecast.
What we have to assess is the effects on activity and on inflation. On activity, tariffs are obviously bad news for everybody. But it's a bit through the direct effect. It's still more for trade uncertainty. And the problem is that, again, this crisis raises, again, trade uncertainty. So it's bad news for everybody again, including the US.
Another ratchet up in tariffs would certainly rattle markets as they did a year ago. I think there would still be a hope that the dialogue could unravel that. I think the security issues around the world are not. The market seems to be a bit immune to what happens on the security front in any of the theaters of conflict, but only to a point. And if it feels like it's changing the world in a structural way, or inviting aggression, for example, in any of the different spheres of conflict, I think that could be rattling for the markets.
There seems to be a Sell America theme. Is that benefiting Hong Kong in any way?
Well, this is my third day at Davos, and I would say that the one word that constantly come up in all the dialogue, it's the word diversification. So I think, you reported it a lot. The last few years, we did see maybe global capital gravitating towards the U.S. And concentrated really in a few stocks. But given all the volatility, uncertainty, unpredictability, investors generally just want to seek more ways to diversify.
We have to stay tuned for more volatility going forward and predictability and rapid changes. So I think that's staying diversified in financial markets nowadays is pretty important.
And let's get to what that word means, diversify. It feels like that's a diplomatic way of saying Sell America sometimes, and I'm not going to put words in your mouth. I'll tell you what others are saying. PIMCO is talking about a multi-year period of diversification away from US assets. We've seen from others moving out of US Treasuries. There was a headline earlier on this morning about a very small Danish pension fund, and they've got their own issues in Denmark right now, given their relationship with America. What are you seeing develop?
Well, diversifying away from America is impossible. I think that in any major asset allocation, one could probably think about having an overweight or underweight, but diversifying away from the US and also from the dollar is a quite dangerous bet.
Is there going to be a big de-dollarization? Are you going to see countries outside the U.S. move away from the dollar quite quickly?
Generally speaking, you're seeing a diversification away from the U.S., right? Last year, U.S. markets, wonderful performance, but underperformed the rest of the world. And you're seeing a shift in the assets held, particularly, let's talk about money. In other words, when you look at the gold being up 67%, it's not a precious metal that goes up 60%. It was bought by central banks, particularly, but others, in order to diversify fiat currencies, not just dollars, okay? It also has to do with euros and so on. Fiat currencies, which are essentially debt instruments that get monetized, were the big move of last year. The biggest move, bigger than tech stocks, bigger, that was the biggest move.
Think about what the markets did after Liberation Day. We were all looking, oh my gosh, and you know what? We came out pretty okay on the tariffs. China, it was going to be 100%, right? The markets reacted to that. A little less. You got through that. I think we'll get through this latest
Is this because the U.S. economy is resilient, or the world economy is resilient, or?
Well, it's both that, and believe me, I think AI. We haven't even begun to see the impact of AI on individual companies. I think the next really exciting thing is the companies within sectors that actually get it right. They will take off, leaving the others behind in that sector. And so right now it's been the picks and shovels that have really been the ones that have gotten the evaluation advantages. It's going to be those companies, and it takes time for them to figure it out.
I don't think there's any uncertainty about AI. There's no question of hundreds of billions of dollars is needed to build this out. The CapEx is going to drive more global growth. How that is going to be dispersed and where it's going to be really dependent on each and every government. But I sincerely believe there is no bubble in the AI space. That being said, like in everything else in capitalism, there's going to be some big failures. Okay, we always see a rotation, and there's going to be some huge winners and some losers. But do I believe the needed capital to build out AI is one of the great opportunities for the world to come?
How much AI investments are you expecting this year to help the global economy?
What we expect is to see continuation of this flow of funding in AI at the cost of investing in many other worthy areas. we are not yet worried about frothing that may be like dot-com bubble, but we are cautioning people that they really need to follow very closely the productivity impact of investing in AI. So far, there have been gains, but will they be sustained? Remember, we were assessing the growth impact of the AI between 0.1%, 0.8%. That's a big difference. Yeah. And therefore, the reward on investment is what we are a bit worried. Would it materialize with the scale and the speed that justifies this massive flow?
We're letting all of this AI technology out fully unregulated. And by the way, you remember, that's true what we did with social media as well. And you probably remember what I said in 2018 here, which was social media was becoming the same kind of very dangerous technology. And look, a lot of governments have made changes around social media now. So you go to a lot of countries, if you're not 17, 18 years old, you're not going to use social media. There are controls, there are protections. We need to get there with AI now.
And talking to European business leaders in particular here, they're very concerned about the rate of innovation and the rate of growth. We're seeing that all of the tech platforms have not been able to launch particularly their AI products at the same rate as they can the rest of the world. And there's increasing frustration with business leaders here, even more so than last year, because they can see that they're not able to take advantage of all the new products. When you look at some of the research out there, take GDP. 20, 30 years ago, GDP of Europe and the US was exactly the same. When you look at the creation of new companies that are reaching over 10 billion in market cap, Europe's had about 20 of those companies. The US has had over 200. So it's very clear that there's a link between complicated regulation and also the ability to allow innovation to flourish and grow.
We talk about slowing growth. We talk about geopolitical tensions escalating. Are some of those, I guess, factors likely to impact sentiment?
I think every year there's never a dull moment. There's always some news. We are still talking about trade war, geopolitics, as we talk about it during COVID, after COVID. But I think right now everybody felt life needs to go on. Every company just needs to focus on what they can control. And that includes not only growing, the R&D, growing their innovation, understand the consumer market and do it better there, but also internal efficiency as well. So we spend a lot of time with our portfolio companies on internal efficiency improvement.
Is China behind, though, the West?
China is not behind the West. I think this is a fairy tale. In AI, they are very much at parity. And the year ahead is going to be extremely interesting in that respect. We care about Europe maintaining its position, Europe maintaining its ability to train models, because we don't think that we should rely on open source Chinese models in very critical applications. So we need to be able to create our own models and to sell them to enterprises. So it's going to be very interesting, but it's a fairy tale that China is behind.
Coming up, more of the best of Davos 2026.
The one thing I've enjoyed over the last couple of days, there is genuine debate. There are different opinions now, rather than the sort of consensus view.
This is Bloomberg. Welcome back to Bloomberg's Look Back at Davos 2026. I'm Francine Lacqua. A central theme of this year's meetings was cooperation in a more contested world. There could hardly have been a more timely topic. Throughout the week on Bloomberg TV, leaders in politics and policy shared thoughts on the current climate of confrontation.
Last year, you famously got a $20 billion swap line from the US, a big success. When you got it, Scott Bessent, the Treasury Secretary, said that you had committed to, as he put it, to getting China out of Argentina. And you have always been very critical of China, but as you know, China still has a space station in Argentina. You still have a swap line with China. What does getting China out of Argentina mean to you?
In my view, what Scott Bessent said is well in line with the thinking of the United States administration, and this is a matter related to geopolitics. The United States does trade with China, and the way we see it, China is a great trading partner. It means a lot of opportunities for us to expand markets. So that is not any source of conflict. When the geopolitical time comes, do you have any doubts as to where Argentina stands?
China doesn't have a space station in the United States, the last time I checked. It does have a space station in Argentina.
Well, that's not proven.
Well, China doesn't. I will ask President Trump whether the Chinese have a space station there.
Isn't it interesting? I mean, 5 years ago, here at Davos, the main topic of conversation was climate change, DEI, all that baloney. And here we are, 5 years on, and the debate's completely different. It's being dominated by AI, tech, energy. And the one thing I've enjoyed over the last couple of days, there is genuine debate. There are different opinions now, rather than the sort of consensus view that I certainly felt was coming out from the globalists. So yeah, no, I found it really interesting and worthwhile.
A year ago, DeepSeek seemed cataclysmic for the West. Now, a year later, it's quiet. China seems to have been quieter.
Yes.
Has your opinion on competition from China changed?
Not really. I mean, I didn't think it was cataclysmic in the first place. I think it was a massive overreaction. In the West, it was impressive. And I think it shows that the Chinese are very capable, the leading companies. I think companies like ByteDance actually, I would say, are the most capable. And they're maybe only 6 months behind, not 1 or 2 years behind the frontier. So I think that's what DeepSeek showed. Some of the claims were over-exaggerated about, the amount of compute they used and being so minimal and so on, because they relied on some Western models and also fine-tuning on the outputs of some of the leading Western models. So it wasn't sort of de novo. And the other thing I think so far is not, yet to be seen is, can China actually, the Chinese companies innovate beyond the frontier themselves? So they're gaining, they're very good at kind of catching up to where the frontier is and increasingly capable at that. But I think they've yet to show they can innovate beyond the frontier.
2 days ago, Ken, we witnessed a disorderly, seemingly uncontrollable sell-off in the Japanese bond market. And there are many people here who may not be paying close attention to the Japanese bond market. Pay attention, right? It has been described as eerily similar to the UK's 2022 gilt crisis. Is there an implicit warning, Ken, in that sell-off for the U.S. Treasury bond market?
You need to get our fiscal house in order.
Liz Truss was playing with fire. The Japanese just learned they're playing with fire. Is the United States, is President Trump playing with fire?
Probably not yet. The U.S. has so much wealth, we can maintain this level of deficit spending for some period of time. But the longer we wait to change direction, the more draconian the consequences will be of that change.
That wraps up our look back at the 2026 World Economic Forum in Davos. To see more interviews, panels, and analysis from this exciting week, visit Bloomberg.com or the Bloomberg Terminal. Thank you for watching. I'm Francine Lacqua, and this is Bloomberg.